Now we will learn about the capital project funds. Capital project funds are for some constructions, or it can be related to purchase of some significant fixed assets. Although it may take time to complete a project, but the term is not too long. Usually those construction period is for from 1 year to 3 years. For example, a bridge constructions or a stadium constructions or the construction of a convention center or community center. So capital projects funds can be funded by some bond proceeds, or it could be from some tax revenues. There are several other sources of revenues that you will see for a capital project fund. One example is investment earnings. So investment earnings such as any investment income from any other investment property. One could be tax revenues. So some special type of tax could be kept only for a specific capital project, or it could be capital grants. Grants could come from other governmental entities or from any other parties. So most of the cases you will see for grants there might be some restrictions related. If there is any restrictions or criteria need to be met, remember the grant or cannot be recorded as a revenue. But if there is no restrictions, so grant money can be recorded as a revenue. So you will see under the capital grant parts there are some journal entry examples in the Baker note. So if you receive any unrestricted grant, then you can directly debit cash and credit revenues. But if you receive any grant that comes with some restrictions, of course you debit cash, but you credit revenues collected in advance. That means it's not a revenue, it's a liabilities. And the condition might be you will record it as a revenue when you spend it. So when you spend a part of the money, then you record it as an expenditure, and then you reclassify that liability or what you call unearned revenue, or they use the term revenue collected in advance. So you remove that part from revenue collected in advance and then you record it as a revenue. You will also see interfund transfer. Usually the fund comes from general fund. So if you get money from the general fund, then the capital project fund will debit cash, or it could be from any other fund, and then they will credit interfund transfer. Then it talks about some special assessments. So special assessment means that you are collecting tax from a specific group of people who will be directly benefited from that project. For example, you are doing a construction, sidewalk construction or street light project, and you can charge tax money only for people living in that area. So you have to check that who is preliminary responsible for to meet up those obligations. So bond purchase is very common for capital project funds. So bond could be issued at par value or at premium or at discount. So you have to record as per the price. And remember, we are still under the governmental funds, and because of the modified accrual approach, we cannot record any bonds payable or show anything as long-term liabilities. And there might be some cost related to the bond, underwriting fees, those we show as expenditure. So under these bond proceeds, you will see some examples that bonds can be issued at premium. So if you issue bonds at premium, so of course you are getting cash, and then you will credit other financing sources that would be the par value from bond proceeds, and the premium you will show it separately. So it will be another other financing sources credit source of your fund, but you label it as premium on bonds. Now here, if we sell any bonds, right after selling the bonds, then if you sell it at premium, the premium will be transferred to the debt service fund. Then you will see sometimes you issued bond, but the project is delayed for some reason. Then if you want, you can invest that money. There is one example and some other journal entries. They invested in CD, certificate of deposits, and then they also received some income from that investment. So you can also see those journal entry examples. So capital project funds involves lots of expenses. Of course, you need to spend on different items, and you may need to purchase some items, some long-term items. Long-term items we record as an expenditure or capital outlay. So since it involves some purchase some items, so you will see encumbrances journal entries. So you will record the encumbrances and budgetary control when you place the order to purchase any item, and then when you purchase, you record the expenditure entry and you eliminate the encumbrances and budgetary control things. It also discusses some unique accounting issues, and it talks about some short-term borrowings. It's not like bond issue proceeds, but what if you take some short-term borrowings, you will also show that type of borrowings as other financing sources. Or it could be sometimes some short-term financing that you'll be paid with some tax money, so you are getting cash, but when you credit it, so you will use the term tax or revenue anticipation notes payable. And then at the end, you will see, since we are doing budgetary entries and encumbrances, so we have to close all those entries, and all sorts of revenues entries and expenditure entries we will also close, and then at the end we will show our fund balances. Now here you will see some examples, the closing entry examples and some financial statement examples. So they gave the example convention center construction. That is one of the capital project for the town, Progressive Township. On their balance sheet, you will see they have assets, of course, cash they are getting it, and liabilities, accounts payable, which they have to pay immediately. And then they have huge fund balance, and that fund balance is, of course, restricted for that specific capital project or for that convention center construction related. So you will see only one category, restricted category here, because you are obligated to use this money for that convention center construction. So you will never see unassigned fund balance here. Then if you look at the statement of revenues, expenditure, and changes in fund balance, you will see the example here comes in. The only revenue they have interest earnings, and they have several other expenditures, mostly capital outlay related expenditures, and they have different financing sources. Either it's coming from other funds or from bond proceeds or some long-term debt related proceeds. And then at the end they will show their net changes in fund balance. And then you will see that this convention center construction project not only involves the capital projects. Of course, it's a huge capital projects, but it is also related to some other projects. For example, if some special tax is kept only for this project, then you will see some special revenue project. Or if bonds are issued for these convention center constructions, some debt service project might be also involved here. So you will see one comprehensive example for that convention center construction projects and how different governmental funds are related and those balances. Then the last governmental fund is the permanent fund. So we also know that the permanent fund means that the money is received but you cannot use the principal, rather it's an endowment type of things. You will just make some earnings from it, a perpetuity type of earnings, but you can use that earnings. So the revenues for that permanent fund involves all the investment earnings, and expenditure will be related to the operating purpose of that fund. Now we will see some examples here. Question, we will try to solve that. A capital project funds for a new city courthouse recorded a receivable $300,000. It is coming from a state grant, and $450,000 transfer from the general fund. So what amount that capital project fund should record as a revenue? Remember, this $300,000, it is coming as a grant, so this is of course a revenues because it is coming from another grant. It's a source of the revenues, a governmental mandate it could be, and we assume that there is no restrictions related, and that's why we can record it as a revenue. But this $450,000 is transferred from the general fund, so it will be other financing sources. These will be credited or recorded as other financing sources. So the question is asking only about the revenue, so the answer will be 300,000, which is B. Number 2, Jeff City issued 1 million general obligation bond at 101. 101 means it's a premium, right? It's more than 100%, so it's a premium, so they will of course receive the par value plus another 1% premium. And then they have also some costs related to the underwriting fees and debt issue cost, which is $2,500. So now, what amount should Jape City report as other financing resources? Remember, the bond proceeds will be recorded as other financing resources, and if the bond is issued at premium, both will be other financing resources, but we will just break it down and credit it in two steps. One will be the par value, also other financing resources, and another will be the premium part. So in total, so if you take 1 multiplied by 101%, so it will be $1,010,000. This will be your the other financing source from bond proceeds and from bond premium. On the other hand, when you will see costs related to the bond issue such as debt issue cost and underwriting fees, we shows those as an expenditure. So for other financing sources, it will be answer A. Number 3, Tang City received a land from a donor who stipulated that the land must remain intact, but the income generated from the property may be used for general governmental service. So that land, that asset, you cannot use it. So it will be held permanently, but you can use the income. So how they will record it? So sounds like it's a permanent fund. We will learn about the second fund categories under the fund financial statement, which is proprietary funds. So remember, proprietary funds means the funds that provide services, and in exchange of those services, or might be some goods, other products, they will get some exchange fees. And proprietary funds follow the accrual method. It does not follow the modified accrual. So for proprietary funds fund statement, especially on balance sheet, you will see that those are economic resource focused. You will see both short and long-term assets and liabilities. So proprietary fund could be classified into two categories. One is the internal service fund, another is the enterprise fund. You already have some idea. Internal service funds means that the funds that provide service to other governmental units or other governmental funds, and that could be any type of service, for example printing or duplicating service, or some repair shop, or some computer or technology service. So they can charge other governmental funds or other governmental unit for providing those services, and this is how they make their revenues. So revenues could be from different sources. One part could be grants. So grant revenues, if it's not restricted, they could record it. If it is restricted grant revenues, then you have to wait until you spend it. Otherwise, initially it is shown as a liability, but a huge portion of their revenues will be coming from some operating revenues. That means the revenues that they make while they provide service to different government units. So if they provide service, they might receive cash right away, or they can debit due from other funds, and they can record or credit their operating revenues, and they usually bills to other funds or other departments because the service is provided within governmental entities. Now they might have some non-operating revenues, which is mostly some interest earnings from some investments. For expenses, you will also see two major categories: operating and non-operating. Operating expense means those expenses related to the delivery of the service, and non-operating, you will also see interest expenses, the major non-operating expenses. Now here you will see a little bit about how to establish an internal service fund and what should be the recording journal entries. So to establish an internal service fund, you need some money, and that money can come from other fund. So it usually comes from the general funds. So if we bring some money from the general funds and to establish the internal service fund will debit cash and credit interfund transfer, or it could be any other type of capital assets that they could also get from the general fund. So then they will debit capital assets and they will credit contributions. So it's type of capital contributions they are getting. So you'll see this journal entry in the Baker notes. Another source of financing you will see here, when they establish it for the first time, they can issue bonds, and they debit cash and they credit bonds payable. And of course it can be long-term bonds payable, because internal service and enterprise both follows the accruals method, and you will see long-term bonds payable as long-term liabilities. And then here another way they could, when they establish for the first time, they could get loans from the other funds. So they can debit cash when they get loans, and they can credit due to other funds. It's another liability, they will pay it later. Now, if you look at the financial statements, they prepare statement of net position, which is just like a balance sheet. And here they will record all assets, both current and non-current, because they are following the accrual or economic resource based financial statement, not just current focus. So you see in Baker's note, the Progressive Township's statement of net position. So they listed all current, non-current assets, and they have liabilities, of course, long-term, short-term, or current and long-term liabilities or non-current liabilities. And then the difference, assets minus liabilities, they call it net position. So it's not fund balance, because it's actually accrual accounting. We call the difference as net positions. And the net positions can be classified into three categories: net positions in capital assets, restricted, and unrestricted. You also have seen that categorization. Now they will also prepare a statement of revenues, expenses, and changes in net position. It's just like changes in fund balance. And they also prepare a statement of cash flows. Now, next category of the fund, of course, is under the proprietary. It's the enterprise fund. So enterprise fund also provides services, and those services they provide to outside people, to public, and they work just like a business enterprise, and they will of course follow the accrual method. And you will see economic resource focus financial statement or balance sheet will have both current, non-current items, and they will usually be financed with some debt, and that debt could be pledged or secured by the net revenues that is coming from the fees and service fees or charge they earn. And then there might be some regulations that the cost of providing those services to the public, and that should be recovered through the fees that they are earning. And you will see several examples for enterprise fund. For example, utility companies, electricity or water sewerage companies, public hospitals or airport, public transportation is a great example. Or you will see some public golf course or swimming pools. So general public like you and me can get those services and they will charge us fees. This is how they make their revenues. So main source of revenues are operating and non-operating. So non-operating revenues, usually those are the interest income, and operating revenues, of course, those fees and charges they are collecting from public by providing those services. Expenses will also be operating and non-operating. Operating expense means the expenses related to those major categories of the services they are providing, and non-operating expenses also interest expense. Then you will see some journal entries when first time establish an enterprise fund, how they are getting their capital. So they can get the money from other governmental funds or from the general fund, or they can issue bond. So when they first time establish it, for example, they are getting money from the general fund, so they will debit cash, or it could be any other capital assets, and they will credit capital contribution. It's just like a business enterprise. So they established it first time, so they will credit capital contribution. They could also issue bonds, and they will debit, in that case, debit cash and credit long-term bonds payable. You will see the journal entries in your CPA notes, and of course they can record long-term notes payable. There is one landfill examples. You are also familiar with it from chapter 17. That means when public, all those garbage dumps, they do it in a landfill, and that requires a huge amount of cost to close it, and it also involves in post-closure cost. And for that, they can charge money, they can charge fees from the public when the recycling company or the garbage facilities, they are taking our garbages, we have to pay them. So then that means it is running as an enterprise fund. But you will see some examples in chapter 17 that these type of landfill facilities could be also governmental. That means they don't charge money. So if it is run as an enterprise fund, then you have to check the entire closure and post-closure fees, which will be a huge amount, although that is due at the end, maybe like after 20 or 30 years. But every year, because of the accrual method, every year you have to record the accurate portion. So this is one example, and we'll see one question related to that. For the financial statements, enterprise fund will also prepare a statement of net position, which is like a balance sheet, and you will see one example from Progressive Township that their water and sewerage fund, they charge fees from public for this service. They have both current non-current assets and liabilities, current and non-current, and they have their net positions. Net positions are also categorized into three categories: net investment in capital assets, restricted and unrestricted. They also prepare a statement of revenues, expenses and changes in net position, and statement of cash flows. Now we will see some quick example from that module. Number 1. Question: the billing of transportation services provided to the other governmental units are recorded by the Internal Service Fund as what? So when Internal Service Fund is providing service to other governmental unit, how they will record it. So this is their operating revenues, right? So it's not appropriation or budgetary type of things. It's not inter-fund exchange or intergovernmental transfer. It's just not merely like transferring, non-reciprocal. It's reciprocal, both-way transactions, and they will record it as operating revenue. So for example, an internal service fund, one example could be printing shop, and they are printing some copies and books from some public school or some brochures. So they will charge that entity, and they will debit due from other funds due from other funds, or if they receive cash right away, they will debit cash and they will credit revenues. You can credit is as operating revenues. So that billing for that transportation service, here they will credit as operating revenue. So the example is from public transport fund. Now, second question, Tri-Cities Municipal Solid Waste Landfill Expenditure Fund was established and that was opened in January 3, year 1. The landfill will be closed in year 20. Right, and then they estimated all those costs. Those cost is cost of final cover to be applied to the landfill, that is kind of closure cost, and there might be some post-closure cost of equipment to be installed to monitor methane gas buildup. So it sounds like closure and post-closure cost, maybe those are due after 20 years, but they are using the accrual method. So every year they will record the accrued portion as an expense. So here, what expenses they will record in year 1? So they will record 1/20th portion, or based on what percentage is filled up, that is their accrued for both this closure and post-closure costs. So they will record both 1 and 2 based on year 1's accrued portion. Number 3, a state government had the following activities: state-operated lottery, state-operated hospital. So looks like here public can get service from both, right? Those are state-funded or state-operated, right? Either lottery or any commodity or hospital service. Which of the above activities should most likely be accounted for an enterprise fund? So both are service oriented and outside public can get service. So here both 1 and 2 will be under the enterprise fund.